Hi, it's Brian Jessen speaking. It's Thursday after the Fed Reserve meeting. Let me give you a quick snapshot of what things going on. This should help you a lot on your cocktail conversations coming in the next few weeks. So let me look at the board here, show it to you, and then I'll finish up with a quick summary at the end. So here's kind of what I laid out. So the Federal Reserve raised rates for the 7th time this year, and they've been raising in big chunks. Yesterday, they raised it 0.5%. So we went from a March of this year at basically 0 to 0.25% interest rates on their Fed funds rate, which is not mortgage rates, but still showed how low rates were like at the end of last year, early this year, to about 4.5, quarter to 4.5, which is a big increase in a short period of time. I think their goal is going to be about 5.25 on their rate. So they'll probably raise at 25 to 50 and February 1st to be exact, and probably another 25 in March, and they'll just have to see how much the economy is slowing down. I mean, the economy is slowing down in housing and inflation, but not in the employment side. That's the biggest problem right now. The wages are going up 4 to 5%, and there's 4 million shortage of workers. If you talk to almost any business, there's not enough qualified people for most jobs. Inflation has been trending down. It's nowhere near their goal of 2%. It came out at 7.1%. It's down from 7.7%, which is great. The high was June at 9.1%, which is crazy. But I think we're going to have a tough time getting below 3 to 4% because of that wage issue of wages still rising. The core without food and energy, which I always thought was a bit silly not to include those, is running 6%, down from 6.3%, and a high was 6.6 in September. So there is a slowdown happening. A mild to medium recession, hopefully mild in 2023. So let me give you a few other quick little snapshots, and then we'll wrap it up. So to give you an idea of a few other things, like manufacturing's slowing down a lot because demand is starting to slow down. Sales, like Christmas shopping, holiday shopping, was down in November 0.6%. So it wasn't up; it was actually down. And more than expected, and the manufacturing down was more than expected. So there is a slowdown happening. It's not as fast as typically would be going into recession, but people are getting cautious, careful with their money. The housing market's still pretty strong. There's still a lack of inventory, and prices are stable, maybe slightly going down. It just depends on what area of the country you're in. But I think the issue is there's just not enough housing on, people not putting the houses on for sale, and there's not enough builders building units right now with people being cautious. So Brian Jessen, Guaranteed Rate. Sorry for the long message, but a lot to share with you, and I'll be out tomorrow with just a quick one to go with rates. Thanks. Bye.